Welcome to Investors Insights. Our topic today is, will corporate confidence lead to further market growth? Good morning, gentlemen. It's good to have you here with me. So always honored to be at the table with Ashley Page, Bobby Norman, and Trey Booth. And especially the way you guys were going at it this morning in the debate. One of the cliches that came up today, or a saying is, actions speak louder than words. And on that note, Bobby, you talked about corporate CEOs, board of directors. What's taking place in relation to the market?
Yeah, so corporate confidence is back in terms of corporate executives buying back their stock. That's a positive sign. That means they're positive not only on their companies, but the economy as a whole. It really slowed down going into the election. That's not unexpected. A lot of uncertainty around the election, but it's really picked up the past 2 months. And so that's needed, and especially in a mature bull market that we're in. Investors, corporate executives still have confidence that it can continue to go further.
Well, and you're bringing up a point. The S&P 500 on Thursday went over 2,300. Yes. And now the question becomes, is that a continued resistance level, or if it becomes support, could we see this market go higher? That's a question we'll have to answer this week. And then you talked about something that brings confidence in terms of Trump nominees and whether they get approved or not. Talk about that.
So this week's a big week. We've had a lot of nominees approved already, but in terms of tax reform and the market and confidence, the Treasury Secretary, Steve Mnuchin, is supposed to be confirmed today. It's really hard to get tax reform moving without a Treasury Secretary in place. So a lot of the CEO confidence built around corporate tax reform, that's going to get possibly sped up this week. We also have Wilbur Ross, the Commerce Secretary, coming up for confirmation this week as well. So those two are big appointments that really have more to do with the economy than politics.
And could inspire more confidence.
Exactly, could inspire more confidence. That's what we see from the CEOs. We got to have that extra confidence to go that next level.
Right, and then actually on that note, talking about government,
Yes.
you brought up a very interesting point that was tied into regulations. If you have more regulations can be good, but they can also be cumbersome if not applied properly. Talk about what you brought up in the meeting.
Correct. One major trend we're seeing is regulations dropping, which lowers cost. And one that we wanted you to focus on, maybe you hadn't seen, is on Dodd-Frank. Dodd-Frank is they're going to really be ramping the attack up on that.
Okay.
And part of that is the Consumer Finance Protection Bureau, something you may not have heard of, but it's an internal core of Dodd-Frank that goes out to a wide variety in the financial industries, credit unions, mortgage, credit cards, all of that. It has been a huge cost burden. The agency itself has grown like 1,274%.
Wow.
And if you can get in there
just 6 years,
in
right?
just 6 years, a $7 billion cost impact on the credit union industry. If you can extract that, you could really gut a lot of Dodd-Frank and cut a lot of these costs and regulations.
Right, and that's been one of the things is we want regulations, but we want good regulations.
Correct.
So on that note, we hope you've picked up ideas here. You've given us 3 minutes of your life, and we know you won't get that back. We also hope that you will follow us on LinkedIn, Twitter, and Facebook, because we want to continue this thought process of giving new ideas, educational value, and also information that helps you with your portfolio and a better understanding of the markets. Make sure you take time to do that.